Hey, happy Sunday, everybody. Welcome to yet another Gold Rush weekly watch list. This week is going to be a little bit of a different format. So I asked for some requests in the server, in the watch list channel. So this week, my focus is basically just to go through those requests. There's some that I like, some that I don't like, but I'm going to go through the ones and kind of walk you through what I see. So before that, let's quickly start with SPY and QQQ and IWM, just so we can kind of make sure we have our head on a swivel and see what the market is doing. So in terms of SPY, we never really, we're still on our way to kind of recover from this big downside move. Now let's go to the weekly candles so we can kind of see what last week looked like. So last week, we put in a higher open and a higher close than the previous week, and we retraced most of this downside candle here. Now we just really need to, we sold off a bunch towards the end of the week, and so we really need to like continue this march up and break through these moving averages, right? That's what we really need to do in order to remain bullish. We had a massive drop on Thursday. I actually had a gap down with a drop and then kind of a recovery a little bit on Friday. Friday's candle, the range of this candle, let me see, let's look at the high is 452.78. So, we didn't quite break the high of the previous week, but we went and kind of tested that area. We rejected a little bit at the 21 SMA, this white line here. But we did close above the 9 SMA on the daily. Right, this yellow line is my, EMA. This yellow line is my 9 EMA. So as long as we hold this 9 and continue to hold this 9 into this week, then, or into tomorrow rather, then I think that will be bullish. I had a few people in my DMs talking about a potential dead cat bounce. So really like, a big downside move and then some consolidation, a bounce, and then a continuation of a downside move is what people are looking for. I think that would be healthy for the market, for us to kind of reset, bring all these moving averages down, consolidate just like we did here, and then work our way back up. I do not have a bias. I like to play what I see, and you should do the same. You should look, and whatever the market is giving you is what you should play. So we'll continue to do that. I am not going to give you levels on SPY. You can find levels on SPY in the server, either S or J or really anyone, anyone who really reliably plays SPY on a daily. I think everybody should have SPY numbers, SPY levels on their charts. I have SPY levels on my trading view. I keep trading view open with SPY all day, all night, just so I can kind of know what's going on. And then I use my Thinkorswim when I'm trading to kind of look at, the rest of the market. So I'm not going to give you levels, rely on your own levels. If you do want to share levels in the server, go ahead and share it with me in the Watchlist channel. So we can kind of have it there, have it locked, and have multiple sets of eyes on it. So now I want to do two things with this. I'm going to draw a Fibonacci from this high of 479.98 down to this low right here. Right here, 420.66. 420.76. I'm off by 10 cents actually. Let me fix it. 420.76. Okay. So we made this massive downside move and we bounced and we kind of played around between these two levels, 38.2 and 23.6 Fibonacci levels. Sorry, I did that wrong. I gotta flip these. 479.98. I want to flip these. You draw from top to bottom on a downtrend and from that bottom to top on an uptrend. Now the math lines up. So like, 38.2, if you take 100 and you subtract 61.8, then you get 38.2, right? If you take 100 and you subtract 78.6, you get 23, 78.6, you get 23 and change, right? Obviously 100 minus 50 is 50, so the 50 stays the same. So just quick math on fibs. Fibs are interesting. Really, it's in the eye of the beholder. It depends on how many people use fibs and see fibs that kind of marks a move. But anyway, we came back down. We made a full 100% move, right? From the top here to the bottom down here, 400% move, right? So that's my 100%. Now we retrace to about 61. We kind of failed. We kind of failed to break through the 61.8% fib level. We came back down to the 78.6 and we kind of found support there, a bunch of buyers at this level, and then we kind of bounced from there, broke through the 61.8, broke through the 50, and rejected at the 38.2, right? Now we're kind of playing in between these three levels here, between 38.2 and, you know, obviously 50 and the 61.8. So in order for this to remain bullish, not only does it have to hold this 9 moving average, but it has to get above this 50% retracement. So, or in other words, it needs to retrace and claim and hold above 50% of this downside move for it to say, okay, that now we're working our way back up. So I'll be looking for that in order to play calls. What I see happening is a potential squeeze between this 21-day moving average and the 9 EMA here. Pretty much, they're going to meet pretty much at the 50. So what they're going to do is something like this. You know, this is going to continue to work its way down like that. This 9 is going to continue to work its way up like that. And we're going to have a candlestick right here. And what you're going to see is kind of a natural pennant between these two moving averages. And whichever one's stronger is the one that's going to win between the 9 and the 21. And again, I hope that the 9 holds so we can kind of work our way at least to retest this level at least, right? But I'm not married to it. Whatever it wants to do is whatever it wants to do. Let's look at the cues. So if we look at the cues, it's pretty much doing the same exact thing. I'm going to go ahead and draw a fib. Where are we? See, the fib is going to be different from this time, though. And we can go from here. Actually, I'll draw this fib entirely different. I'll go from COVID low over here. So we'll do 408.71 down to this low. And now we're going to look at it on the daily. So we kind of worked our way up, made the 100% move, right, from COVID low to this 100%. This is my new high. And now we're retracing that move a little bit. Now we fell underneath the 78.6, as you can see, and right now we're really consolidating at it. Like we fell underneath it, came above it, and now we're just kind of deciding what we want to do right at that 78.6 fib. The 786 fib and the 618 fib are really the key levels to hold. We can come back down to 618. So actually, while I'm here, what I do see for this, and what I actually would love to see for SPY and QQQ would be something like this, right? Something like that. You know, kind of a breakdown, break that H, come down to retest this 618 level, which if we zoom out was a previous level, right? These things always just line up that way. And then kind of bounce here or consolidate and then work its way back up to try to break these levels, the 786 with conviction and this 400 level with conviction, right? That's what we want. But same thing with the Qs. I mean, we have a green MACD as of, you know, it regained its strength as of Friday. The RSI is stable and pointing up. So we really need some, you know, we need some price action to kind of take this up. With some of the earnings that we have this week, I don't know if let me just, I think some of the big boys are reporting. I'm not really on I don't really have it committed to memory. Let me just take a quick look to see who's reporting earnings this week. This week we have I'm just looking for the biggest names. I see Tyson, I see Take-Two, CHWY, SPG, Pfizer, let's see, Peloton, should be interesting, Chipotle and Lyft. We have CVS, we have CGC, we have CCJ reporting this week. We have Disney, Uber reporting this week. Let's see. Twilio is going to be an interesting one because there's a nice gap fill to the downside. Sonos, MGM is going to be interesting. We have Coca-Cola, Pepsi, D-Dog, Affirm, Twitter, Cloudflare, ACB, Upwork. We have UA. And we have a bunch. We have Dominion Energy, which is a pretty big name. So quite a few big names. not so many as weighted as strongly in the Qs, which is good because that means that we're not gonna, you know, the Qs can kind of do their own thing and detach a little bit from earnings this week, unlike last week and the week before. So that's gonna be interesting. Now, so that's what I see for the Qs. Let's look at IWM real quick. Gonna break. So for IWM, yeah, I mean IWM is weaker than the rest, but they're all doing pretty much the same thing. They kind of formed a high back here, another kind of local high. For SPY and QQQ is a little bit higher, but they all kind of are doing this H vibe. So let's see, same thing, higher, kind of a higher low, forming at a place where we had a low, we had a high. Now we're at a point where we're gonna decide what to do. Let me give Jay co-host. What up, Jay? How you doing today? All right, so let's see. So pretty much the same thing. I mean, I'll be watching a lot of the names that are reporting this week are pretty heavily weighted in IWM. So if you like the names and you want to play them kind of risk-free, then you can go ahead and just play IWM. If you think that they're going to get, if you think they're going to obviously make big upside moves and just buy calls, and you won't be subject to the IV exposure, right? So I'm actually going to, hold on, let me just reconfigure my screen real quick. Just give me 1 second. Just give me 1 second. Yeah, okay, cool. Okay, perfect. Now, the reason why I wanted to do this is because I wanted to check out the trade tab and see, I wanted to see if there was a market. So there's no market maker number on this yet. So that's what we'll be looking for. You know, you'll see the volatility kind of pop in. Right now, there's nothing. I think towards the middle of the week, you'll start to see a market maker number up here, which shows an increase in volatility from this week, from this next earnings compared to the following earning, or excuse me, this next expiration compared to the following expiration. So that should pop up maybe with Coca-Cola and Pepsi's earnings, maybe towards like Wednesday or Thursday. You'll see a little volatility getting. All right, so I'm just gonna get into my list. I'm gonna make it as quick as possible. And again, for those that weren't with me when we started, this list is a little more interesting because this list is straight from the members' requests. So I took this straight from the Watchlist channel. So let's see what we got this week. Now I'll be referring to, I have some notes off to the side, so I'll just be referring to my notes as I go through this. So the first one is CB, which is CHWY, which is a wild name for a company, but anyway, I'm gonna, I don't know anything about this company, so if anybody knows anything, go ahead and drop some information on it. Am I recording? Yeah, I'm recording. Good. All right, so let me just zoom in and just on the technicals. What I see is, so I built a bull case and a bear case for each of these. Again, I'm not bullish or bearish in the market this week. I kind of expect for more downside pain personally, but either way, it's cool. So for CB, I think in the bear case, I think the stock is extended. What I mean by extended is it's pulled up quite far away from this kind of rising support line. And now if you look at the weekly, this line, I just kind of did it, you know, from the way that I did it when I drew it from this area here to like kind of this area here. And then I right clicked it and I hit extend to the left. And then I noticed on the weekly that it was a support for a very, very long time, you know, way since last year, 2021, September, right? So it's just kind of been acting as support for all this time. So this is a very interesting line. Now, I think that the price is currently extended from this line based on the price action. Obviously, there's a bunch of selling pressure around this area here. A lot of sellers here taking profit probably from, you know, people who bought over here or even bought down here or even up here, right? They're selling now, right? So I think it's extended from the support as well as from the moving averages. My 9 EMA, my 21 SMA, my 50 SMA, and obviously the 200 SMA. I personally think that it needs to pull back to the 9, to this yellow line. So maybe consolidate or maybe just drop into the 9 to test it. So for the daily, the RSI on the daily is, and this is my bear case, RSI is pointing down. It's at 71 and pointing, excuse me, 67 and pointing down. The daily MACD looks like it's ready to kind of turn over, maybe tomorrow, maybe the next day. Looks like it's going to lose some pressure here, just based on how extended this blue line is, right? Sellers took, so this was all-time high here, and then it made a new all-time high, and sellers immediately took control and closed the day lower than it opened. So I think sellers have it right now. And then if you look at the open interest, it's overwhelmingly bearish. So I'm gonna pull up the so this is the open interest for CB, and right now all the volume on Friday's price on Friday's session was 88% bearish, right? And then even the open interest for 218 chains are 62% bearish. And then even on March is 54% bearish. So I'll be interested to see how this kind of the 318 chain flips. But for the most part, I think, 62% and 88% is super duper bearish. So maybe the people who are in this play are expecting it to kind of pull back a little bit and capitalize on that downside move. Now, for my bull case, I see that there was obviously a positive catalyst with how people reacted to this earnings here a couple of days ago. Friday's pressure, all this sell pressure here on Friday was on relatively low volume, right? Look at the volume here compared to the volume on the gap up, and even on this day and on this day, very, very low volume compared to these days, right? So it could be a potential buildup in volume for a red downside move, or it could just be kind of a nothing day, right? So let's just keep that in mind. We have if you look at the 4 hour, there's a potential bull flag. So this is the 4 hour, and then I'm just gonna zoom in here, and you see that kind of a massive flagpole here, and then it's kind of just holding its place, not really falling down below these levels. The 9 is right underneath it on the 4 hour, and the 21 is not far below. And actually the 21 just crossed the 50. So those are all pretty bullish in terms of price action. And then the next thing is, if you see I'm going to pull it down to like a 30-minute. Yeah, on a 30-minute, there's kind of a triple tap going on at this 208.53 level, right? There's a tap here, kind of a tap over here, and then the third tap right here where it failed hard. Actually, this failure here was what brought the price down all the way down to kind of form that doji, that red doji. So I'll be watching that 208.53 as a key level to enter. If you look at so that's one more thing to watch. If you look at the time frame continuity from the 1 minute all the way to the 60-minute, it's all bullish. So all these candles are green. They're not strong green, but they're green for now, right? And then the last thing is, let's go back to the 30-minute. It tested this kind of pivot low right here at 205.43-ish, this area right here. It kind of tested it a bunch of times. And as Jay said, if you guys have any symbols that you want us to take a look at, go ahead and drop them in the chat. No, I didn't mention that, so thank you, Jay. So we got the 1, 2, 3 times we kind of tested this level as support. Now, that could be a triple tap to the downside. So it's a triple tap to the upside versus a triple tap to the downside. So actually, I might raise this, activate it. I might raise this up to here. Now that we're looking at it with a little bit of a better lens on the intraday. So 205.36 versus 208.53. Those are your levels to watch for this. And then let me just update my notes. 205, what is it? 205.36. 205.36. I'm on my laptop today because my office is under construction right now, so we thugging it right now on the laptop. All right, so the next one that I have is, let's see, the next one that I have here is CHWY. Apparently CHWY was a sore topic on Friday. I guess somebody didn't make as much money as they should have on CHWY. So, all right, so with CHWY, same thing. I have a bull and bear case. So my bull case for CHWY is that there might be a potential reversal here now that we're forming higher highs and higher lows, right? Here are the higher highs. Let me just zoom into it. Here are some of the higher highs here and these higher lows, right? Now, again, this is just a bull case. It's me trying to build a case here. We're still in a downtrend, obviously, and then the highs are, the real highs are way down here. This can easily be a pullback on a downtrend, but it could also be break that downtrend, break this pivot, and now we're in an uptrend, right? So just keep that in mind. This could be the beginning of an uptrend, or excuse me, the beginning of a reversal. So we had a nice bullish move off of Thursday's candle. We put in this hammer on Thursday, and then a bunch of volume came in. We regained strength from the MACD and made high and took out all these previous resistances here. Bunch of buyers stepped in on this day. So that's all very bullish, right? The RSI is stable and it's pointing up. So this RSI is kind of predictive, I would say. Maybe, I mean, it really depends. You'll get like a catalyst where it'll kind of spike in one direction or another, but that really takes a lot and it follows the price action. So it being stable like this and then kind of pointing up shows that there might be a potential additional upside move or at least a consolidation. But I don't put too much stock in this, right? Again, I'm just trying to build a case here. Yeah, we'll take a look at SC. I'm just trying to build a case here and present what I see, and you guys can decide what you want to do with it. So I see the RSI there. The 9 EMA, which is this gold line, just crossed the 21 SMA, which is this white line. Very bullish cross. When the smaller moving averages cross the higher moving averages, that's known as a squeeze. And so we got a nice little 921 squeeze right there that occurred. And now I drew a Fibonacci from this high right here, this red candle right here on 1228 down to this low of 36.7. And so you can see kind of my levels here, 100%, 0%, 50%. Now, CHWY has retraced 50% of this downside move. Right now we're at the level where we're above the 50%. Now we just closed above it or pretty much right at it. If I pull in, I think we're actually still above it. Let me go to the hour. Yeah, so the 50% is 49.06 and we're still above it. Our price is still above it. So that's, to me, that's a bullish sign. Now it's bullish on all time frames. So again, time frame continuity between the 1 minute and all the way up to the 1 day. And now you see how this is dark green compared to the light green. So it's very, very strong all the way into the 1 day. Now, obviously the 1 day, it's bullish. They call it bullish because it started forming higher highs and higher lows. If we look at the weekly, obviously that's not the case yet. We just have that one, right now we have the first higher high and the first higher low, so next week, this coming week, potentially, if we get into kind of these levels here, then we can start working our way into like a bullish weekly uptrend, right? And then if you look at Friday's chains, the volume and OI are mostly bullish on the chains. Actually, let's just look at them real quick. I'm looking at the 218 is what I'm interested in. 218 has, let's see, 13,000 in open interest on the 50 call, and the highest on the put side is the 40 put, which is 5,500. So way more bulls on this, way more bulls on this strike. Now I don't know if you guys can see this screen. You should be able to see the screen on CHWY. This is what I was looking at: 40,349 in open interest, with 57% of that being calls, and 54% of on the volume traded on Friday was on the call side, right? So on this chain, on the 218 chain. So that's what I'm interested in. That's what I'm looking at. When I say, overwhelmingly bullish. Hold on, let me just switch back to the chart. Okay. Can I hide this? Let's see if I can hide this. Hide. Okay, good. Perfect. All right. Let's see. So that's my bull case for CHWY. Now the bear case is, let me just pull back a little bit. Now the bear case is, so we rejected at a previous support level. Go back to the daily. So we rejected at a previous support level. So this level here, this candlestick right here, at on 1210 at 5022. This was a previous support, and we kind of rejected there. Right on Friday's candlestick. If you look at the algo flow command inside of our robot room, then you'll see that there's a downside gap on the 1 day and on the 5 days, which means what that basically means is the algo flow line is above where the price line is. And usually those gaps fill, the algo flow will follow the price. So, wow, baby, your wings are very beautiful. Usually the algo flow line will follow the price line. And so, or excuse me, the price line will follow the algo flow line. And right now the algo flow line is below the price line, meaning that there's going to be a move down in price to meet where the algo flow line is. And that's on the 1 day algo flow as well as a 5 day algo flow. So they're expecting a downside move on the short term and on a little bit of a longer term as well. And by longer term, I mean like by Friday, right? And then the final thing for the bear case is, although we're forming higher highs and higher lows here, you can see the higher highs and higher lows. And I'll just draw it real quick. We have these higher highs and we have these higher lows. But we're still, obviously, if we zoom out, we're still in this downward channel. And at the channel, we're currently at the top of the channel, which means if this channel is intact, if it remains intact, then we got these potential downside moves. Now, I put some targets. On this because this is just very, very clear price action to me. We can come back and kind of break this H and then work our way down to the bottom of the channel. If you want to take, and then these are some crucial levels. Now, this 47.77 is kind of where the resistance is here. This 44.39 is kind of where there's a support here and also previous resistance. This is a Fibonacci level right here. And then the rest of these are kind of fib levels along with the 50-day SMA. So it's very, very clear. You don't got to take these down. I'll go ahead and post them in a watch list channel for everybody. Let's see. And so that's it for CHWY. I personally like CHWY for the downside. I think that the risk is skewed, is better on the downside than on the upside. But if it makes the upside move, then cool, whatever. Next one is CLF. CLF, Cleveland Cliffs. So the bull case is that it's just let's see. There's a couple of things on this that make me bullish on it. Now, CLF is consolidating above the daily 9 EMA, which is gold line. So it's just consolidating, forming, kind of going sideways, building in strength. We had a bullish MACD crossover way down here with a nice swing. So we're going to hopefully get a nice swing up to the upside. RSI stable. So that really can go, I mean, it's kind of pointing up, but it can really go in any direction. Let's see. It formed the higher highs. Right. So here are the previous highs. Here are the higher highs. We need to come down and form kind of a higher low first before we can try to work our way to make higher highs, right? So again, we're up. We had this high. Here's a low. We have these highs now up here at 1935-ish. I want it to form some kind of lows around 1742 and then work its way back up. That's what I'm hoping for. So that's what I'm hoping for in order for it to continue the trend. Now, if we look at it on the smaller time frames, I want the 1 hour. If we look at it on the 1 hour, then we have this kind of cup and handle vibe going on here. So which we know is or may not know, it's very bullish. And then if you just kind of think about it, yeah, it's a cup and handle, it's bullish. Why is it bullish? Because price dropped all the way from 2009 all the way down to $16, $15 and change. And then it slowly worked its way back up all the way to about $20. So that means that buyers want to bring it back up. That's very, very bullish. If we look at the chains, and then after this, I'll do SC after this. We look at the chains for CLF. We're mostly bullish on the volume in OI, right? In terms of the OI, 72%, 73%, 63, 81, 76, 70, 64, right? It doesn't flip until like this weird, mid-month after quad witching, very low open interest, very low volume kind of expiration, right? But otherwise, it's overwhelmingly bullish. Even on Friday's price action, mostly bullish mostly buyers on Friday, call buyers rather on Friday. Now the bear case for this is, this. Let me go back to the daily. So I did a Fibonacci from this high here to this low, and right now we are rejecting a little bit at the 61.8 fib level, which again is a crucial level. I'll leave the crypto to you, Jay. I mean, yeah, we could talk about it. I was looking at Mara and Riot and Hut, so I'll jump on them real quick. But I'll leave, if you want to do like a deeper analysis, I'll leave it to you. I'm not really, crypto's not even on my radar this week, to be honest with you. Although it should be, because I know that Bitcoin made a nice move last week. After SC, we'll look at some crypto after SC, and then we'll jump back into this list. So 61.8 is a crucial level, and then we have this kind of downtrend line, and the downtrend line is meeting the price at the 61.8 level. So this is going to be a very, very tough level to break. So I can see like a rejection back to this kind of rising support line. We have kind of an H forming. You can see that kind of, there's a line and there's kind of a curvy letter. Okay, thank you. So kind of have an H possible, right? Possible. Anything is possible. So we'll see. Give me 1 second, guys. Hold on 1 second. So we have the H possible, and then if you look at the algo flow command in the server, then you'll see that there's a downside gap. Again, same thing. Kind of the algo line is below price on the 1 day and the 5 day, which means they're expecting a downside move. And then personally, just looking at the chart, there's a better risk reward to the downside for me personally. I mean, I think we can go back to retest these low levels before we break through this strong confluence resistance level. 21 SMA, 50 SMA, 200. Like there's just too much resistance here. I think that we have more of a chance to get better price, obviously better move to the downside. So let's look at SC for Tyra. As you can tell, I haven't really looked at SC in a while. These pink lines are old school Huey lines. Let's see if I can find ones the last time I charted these. Yeah, these are lines from 2020. So SC's back at previous 2020 levels, right? SC's back at these at 136, 155-ish levels. So on the weekly, if we look at the weekly, I mean, this was just a puke from 372, more than half off. And now we're back at these previous levels. We kind of undid an entire year's worth of price on this downside move, which is most of the stock market, to be honest with you. And we formed this hammer on this previous week on the 24th, the last week of January. And in the first week of February, we kind of bounced from this hammer and we made a higher high, higher low, and we broke this resistance. So let's look at the daily. So what I see now is kind of the pattern that I think that we're going to see in some of these things where they kind of form this low. Now we have kind of a high, and yes.
I'm keeping an eye on the car on my iPad on the Earth app.
Okay. Okay. Make sure that make sure that you do a good job. What the hell to say? Sometimes I just, kids just say things and you're like, yeah, that makes a lot of sense. All right. Sorry about that. So I'm looking for and I'll just do the same thing. I mean, this is just a puke. It's going to take a lot of faith for this to work its way back up. I mean, we're not even near the closest fib. If we do it on the weekly, from like kind of like here. Yeah, I mean, we gave up the 38.2 fib. And so that's going to be the next level to test, this 38.2. Right there. That's going to be the next level to test. That's going to be the level to break. for us to even, for this to even begin to look interesting to me personally. Now, if you're in the play and there's something that you saw that you liked, then go ahead and share with us. I do like these kind of three back-to-back bullish candles, slight retracement, and then continuation. We're holding the 9-day moving average. We got the 21 right here. So the 21 is right where that 38.2% Fibonacci retracement is at. So this is going to be a tough level to break. And if we do break this level, then we're going to be above the 38.2. We're going to be above the 50-day, the 21-day moving average. And we're going to be above some of these, this pivot right here and back into kind of this level over here. So this is an area, this is a nice bullish area if we can kind of get into this level and hold it. Friday's move didn't have a lot of volume in it. If I recall correctly, I think SC doesn't typically have much volume in it. Maybe it did. Let me just look back. It might have back in like the kind of, I mean, there's been a lot of volume actually now that, I thought there was way more volume back here. But no, a lot of the volume started picking up recently in the past 6 weeks. So cool. Thanks for putting it on the radar. I haven't played SC in a while. So yeah, I mean, 163.3 is going to be the level to beat. 163.3 is going to be the level to beat. Then we can start taking out this chop. Once we get above this chop, really at like kind of this level here, which coincides with the 23.6 fib on the shallow move, on this shallow move, then it can get a little bit more bullish, and then really, this is where you can get interested. This is where you're going to get in, and this is going to be your target, the 50-day moving average. And then above that, I mean, you can ride the fibs up, but if you don't play fibs, then take out the 21, work your way to the 50, take out the 50, work your way to the 200. SC needs, so it looks like they have earnings on the 1st of March. So I was going to say they need a catalyst in order to kind of make them move. And SC, I think long-term is going to be great. They are, for those that don't know, they're the C Limited. They are they're kind of the e-commerce of Southeast Asia. They're one of the big players in the game, along with Jumia, Amazon, Ozone in Russia, Meli, Mercado Libre. So long term they'll be good. I think that I'm not sure, why it went from all the way from up here all the way to down here. I mean, really, it might just be the fact that it made such a massive move out of 2020. It made such a massive move, and it's just kind of giving up some profits back, right? Just like the rest of the market. So it's correcting to levels. We see that the 200-week moving average is formed here. So now that we have it formed, it might be at a point where it's kind of corrected. I don't know. I mean, I personally wouldn't trade it. I don't think the chains are favorable. Let me take a look. If we look at 218, I mean, there's some OI in the chains. There's some volume in the chains. Decent spread for what it's worth. 50 point spread. 50-cent spread rather for what it's worth. I'm not in love with it. Like, yeah, I mean, I'm not in love with it because you can play. If you're playing close, the 170s are relatively close, $15 away, and I mean, this will give you 60% move or so. But if I'm gonna drop $1,000 on some 170s for March, I'd rather drop. That's like you can buy so much more with $1,000. It's not bad. I mean, it's not bad. Let's continue to watch it. Maybe it'll give us a better opportunity, better price. Maybe some more consolidation will give us a good price. We'll see. It is giving you the high low. So it's getting interesting. It's not the best yet, but it is getting interesting. Let's look at Riot. So all these tickers kind of made a nice move on Friday.
They all look the same too.
And they all look the same.
They all look the exact same.
Yeah. They all have like this kind of, this massive puke and consolidation and big green bean on Friday. Jay, actually, why don't you jump on and talk about it?
Yeah. Hold on. Can you see my screen here?
Yes.
All right, perfect. Yeah, so what I mean, like, I had Mara up, but this computer's Windows 11 was nonsense. But you can see Riot looks the same. I think Hut was the only one that looked better. But they're all basically building the same exact bear flag. But the big thing is they run on BTC. And if we want to look at, I don't have actual BTC on Thinkorswim, or nobody does. But if you want to look at BTC futures, which are open right now, they gapped up, which would, account for what Bitcoin did all weekend. Huge move up on Friday, and it's moving up. So, while Bitcoin itself was kind of making the same exact bear flag, now we see that it's moving up. So we're make a reasonable assumption that these are all going to do the same. So, while all of this just looked very bear flaggy, and if you could just play Riot based on its own merit, this is a beautiful bear flag. Take it tomorrow when it opens. Ideally, it would open around 1675 and ride this down. But since all of this is a derivative of Bitcoin, most likely this gaps up to open, clears this gap, this tiny little gap here above the 20, and probably runs for however long Bitcoin runs. Big reason I put that in the chat, Huey, to look at was because I just started looking at BTC, and I was just wondering what the rest of these are. If any of these have anything worth playing. And basically these are all, Mara was a bear flag. This will probably gap up above above the 20-day, and we've got run up until we want to start looking at these immediate terms, 32ish, 50 days coming out, which is probably going to be right around 32 if it, if BTC runs and it gets there, or it could start curling. 200-day is I can't even see it, 35.51. So we're gonna have basically up to 32 to 35 on Mara if we get a nice little BTC run. Now, the one that looked the best in terms of how it's already trading is Hut. You can see it did really build a big bear flag here, but what that bear flag did was pop itself over the 20. So that's a big no-no in bear, if you're looking at, at a pattern like this. But it brought itself back down right underneath, which then makes you think, oh, it's probably, it's just it remounted back underneath. This bear flag's still intact, but then Friday came along on really nice volume, popped itself back over, and as well as held. So, this being such a cheaper stock, the pattern looks better, but now we have confluence here with the moving averages. So my guess is we get a run to 750 or so on this, and $1 on a $6.50 stock is what, 50 cents on 650, 20%.
Yeah, just
10%, a little less than 10%, excuse me, move up. And chances are we probably gap right up there, or maybe gap up to 7. So this one looks the best. Mara and Riot are the two that have the most run. So, with Bitcoin now being what's probably going to be the mover, because we're at 42.5 right now, started Friday at 37, so we've made a 5,000 point move in Bitcoin, which has got some more room to run. I guess I could probably get my trading view up to just pull up actual Bitcoin, but I'd have to log in and do all that. I don't know, Huey, you have any other, because you haven't really been looking at it. And I just started looking at it pretty much when I put it in the chat. So
No, I noticed it on Friday because I usually I organize my watch list by net change to see whatever's just the greenest and then first. And I saw that crypto, Hut, Riot, Mara, what's the other one? Whatever the other,
yeah, whatever the other one is.
whatever they are, they were all up the highest, and they were all high on some volume too. So and yeah, it looks like overstock is still kind of running running along with crypto. So that's interesting.
Yeah, so overstock's another one that it's weird, but it does have a crypto base to it. That's got some room to run too, all the way up to 60, really. Especially if it can just break up above this 51, this kind of old support, new resistance. So I didn't want to make that all, but oh well. Old support, new resistance, overstock is one that we can play in. Yeah, it's not that great.
And it's half off if you like it. If you liked it at 110, you'll love it at 50.
Yeah, you love it at 50.
What you got for us? Why don't you jump into your list real quick so I can give my voice a break?
Yeah, I don't have much. So I really, really hate playing this, but last time I had it on my radar was here and it worked out pretty well. So GME, so my big thing with GME is A, it's a meme stock and I hate the meme stocks, but B, I was worried about an anniversary of 2020. We've kind of made it out of that. So with basically, I think these pumps here were the quote unquote anniversary tries, but all it's doing is bear flagging here. So if we just want to play technicals, and GameStop is kind of playing technicals now, especially to the downside, which you would expect for a stock that's basically been just running on air and rumors. It's not going to move technically well on the air and rumors, but on the way back down, it should move very well. And we can see that it did all through December, bear flag down. And I would like to see another continuation of bear flag down. So I really like this the way the chart is, but again, the caveats do apply. GME does whatever it wants, whenever it wants. So you might see a couple days like this, but I really think the pressure on it is all just moving down. Netflix is my next one. I gotta get off this 5 here. So I had this on the watch list last week, I think it was, when we on the call.
Yeah, and it did exactly what you wanted it to do too.
Yep. It was above this, below this, right? And what did it do? It gapped up above it and it made its move. So I guess the Bill Ackman news gave it some legs, right? To gap up and go. Now we have this to deal with. So it ran, came back to support, dumped it a little bit, but it fought it off all night, or at the end of the day on Friday. So, we can see that this is Friday's action. Come on, open up. Dumped, came back up, dumped again, but all it did was reverse course on Friday. So that leaves us with a pretty nice candle to play with on Friday. So for going forward this week. So I looked at this on the weekly, and at first I really had two bear case, or a bull case and a bear case. The bull case being, I should skip too quickly. The bull case being anything above 420, really, if you want to stay really safe. 420, and we have run all the way up to the 20-day, which will probably coincide right around 450 by the time it gets there. Or 460, which would be the top of this, this most recent peak. So 460, then you get, 467, which I have as an old line, but then you start looking at gap fill, and 500 is a natural number, hold number natural resistance, excuse me. Then I looked at the weekly and I hated it. This candle really doesn't make you all feel nice and fuzzy. But considering this candle here, the week after their pretty awful earnings, what it built here, and let me see if I can get some of these off. Remove this. What it built here is a Morningstar reversal. So on the weekly, you can see that this weekly gap down, which if earnings wasn't here, wouldn't look as bad, but earnings was. Gap down, and then built a nice little, you can, I believe it's called a dragonfly doji, but since it is so much to the up, dragonfly doji being higher than the midpoint is pretty bullish and on pretty good volume for the week. And then another gap up. So there's a couple names for this. This is an Island Star reversal where gap down, gap, big move, or move down, gap down, and then gap up. This is an Island Star reversal as well as a Morningstar reversal because of this single candle that it built here. So even though this is a pretty awful looking weekly candle, if it can pop above, the 200 week is at 423.66. So, if you want to use, on my daily, I said 420 was your safer spot. Looking at the weekly on the 200 week, 425 becomes even more safe. So like I was alluding to earlier, I really did have a bullish and bearish case for it, but the more I had kind of looked at everything that it had built in these 3 weekly candles, I don't really have much of a bearish case. Now, if you do want to be bearish and you want to base it off of, that weekly candle, and there are things you can do, so this being now support and resistance. If it flushes this, I lost all my other ones because I went to the cleaner one, but it wasn't. But if it flushes this, anything down to 380, there's a run all the way down to the low here of 352. So if you want to draw lines in the sand, 400 is your line in the sand. Really, anything beneath, anytime Netflix goes beneath, then all of my bearish case goes away. If we build here and you build the curls for the girls up and pop above 420, 425, we can really get some run. Last one is Old Faithful. Good old Tessie. And so what I see here is, you can look at this and yes, and say it's a pennant or a flag or whatever. But this is kind of more, if you look at it holistically with the volume, this doesn't really create a nice flagpole for a flag. So this is kind of what I call like the, anybody calls, no special name, but is a modified flag here. So ideally on a flagpole, we'll have one big spike up with price and volume to build this flag. But now we kind of got to take, oh shoot, it's not going to let me do it. Take these 2 candles together and their volume together. Now, I'm not saying to totally add the 2 volumes together to build a huge flag, but what it did do was build a nice hammer on the 200 and then had follow through. And yes, it is smaller volume, but it's still, higher volume than it takes on average, So, if we look at around 20 million is roughly where we see most everything peak out. That's still traded at 35 million. So it's still higher on average. So we can kind of build this modified flagpole. And now all we did was just build a nice little flag on lowering volume. So if we can bust above here, 930, I don't really think this 100-day on the way up is going to make any, or this 20-day is going to make too much of a difference, because above 930, that $1,000 psychological level is going to be what's in play. algos are going to start coming in, just like kind of algos came in. I believe Adrian talked about it on Thursday or Friday. I think it was Thursday here. Where it just seemed very much methodical on how this broke out. And this was perfect on Thursday. And you can see once it hit 900, boom, it was gone. So there's a lot of algos sitting at 900. There's a lot of algos sitting at 1,000 that are just going to wait and turn on the buy program when those big numbers hit. So I love the way that Tesla is setting up over here. And if it can break out of this pennant, this flag, that, you know, wedge, whatever you want to call it, that is creating, then, you know, safe play is above 940, 950, and we get you know, we're on a rocket ship to 1,000. Or if you've got patience and you want to just kind of wait it out, and ideally this is how I would like to play it, is we can get it to just form inside this wedge in this, you know, and base above 900, and you should get a nice little move. So this could either be something on Monday or Tuesday, or this could be something that we wait till Friday for, or even next week, and see how all of this plays out.
Nice little, really ugly inverse head and shoulder right there.
Yep.
On those near term. Yeah, you got the, exactly. Yep, exactly.
Here, yep, and I saw this too, and I had my eye on it.
It's really ugly, but
just ugly. It's too ugly. And basically though, if you're looking at this as a head and shoulders, it's funny how these things all work out, because there's your neckline.
yeah,
We broke above the neckline and held. So it just kind of builds the case even more on how this has really nice run up. Now it breaks beneath here, all bets are off until the 200-day. And if we go back, it hasn't touched the 200-day very often, but it rode it here, bounced above, came back to it, hammered on it, bounced above. So, you know, 200 days, another one that a ton of algos are going to come in and just start buying. Let's see. And once this, you know, bounce on the 200-day here, and it hasn't really touched it until here, which is what, 2021, May of 21, and just rode it up as much as it could until it took off. So now we're back to it again. So it loves the 200-day, absolutely loves the 200-day. So this isn't even like a worst case scenario. This is just day trade scenario if it dumps this until it gets back to the 200. And then, like Sam says, and then we see.
Cool. I love it. I'm gonna jump into some more, a few more of the requests. I might skip some of these because some of them they're just nonsense. So let's see what we got. Share. Let's see what we got. So the next one's Chipotle. Chipotle has earnings on what is this? 2 days, Tuesday. So a few things, bullish engulfing on the daily, which means, for those that don't know, bigger candlestick on the highs and lows of this day engulf the candle of this day, and it has a high, it's a green candle, so it's bullish and not bearish, so that's why it's a bullish engulfing. We have a nice retracement. So far we've retraced about 50%, almost 50% of this downside move here, from up here at 1776 down to this 1296. We've done about almost 50% of it. Let's see. And then if we do kind of a Fibonacci from this high and this low, so I'll just draw it out real quick. And then we're still obviously in a downtrend if we look at this year. And we're still obviously in an uptrend if we look at all time. But if we look at the local kind of Fibonacci, then we have impulsive move, big green candles. And then Mutombo comes here and smacks down the price down to 61.8, where we kind of some buyers stepped in, and then buyers really stepped in the next day. So that's bullish in terms of a near-term move. We have a fresh higher high and higher low on a daily, right? So here's your low. So here's your high, here's your low, here's your higher high, higher low, right? So we need to form a higher high in order to continue the uptrend, upward move. The 9 is holding a support. This yellow line is holding a support on the daily. And the 9, is that right? Oh, that's bullshit. I think I might have I switched my notes around. I thought that, well, it looks like the 9 is about to cross the 21 in another couple of days, maybe 2 days or so. Let's see. Oh, that's what I meant. The price just crossed the 21. So price is above the 21 and above the 9. We're going to get a bullish cross of the 9 and 21 in another, maybe 2 days, maybe right on earnings, right? Depending on what earnings does. If you look at it on the smaller time frames, it's pretty much bullish all throughout, all the way till the daily, right? Green all through into the daily. And RSI stable pointing up. And then most price targets are above the current price, with a fresh price target on Friday. BTIG upgraded them to 2150 and reiterates buy. So, and then all the other price targets are, even if they've been lower, they're still above the current price. Personally, I think there's a better risk reward to the upside on this than downside. But you have your targets here. The bear case is that this impulsive move, right? These 3 green candles plus gap up can easily be just a pullback on the downtrend, right? Just like the rest of the market kind of looks like. And we won't know for the next couple of days or really next couple of weeks whether it was an upside or downside. We have a possible bear flag, right? Kind of a bear flag here, kind of an H vibe going on. So that's another bear case. We haven't broken the 50% retracement yet. That's what we need to really, we need to do that first before we can get super bullish. Another bearish thing is that the 50-day kind of crossed underneath the 200-day, signaling a death cross. So like Jay said, algos will initiate a sell program on this kind of death cross that occurred here, which is interesting because this happened, but then there was a bunch of buying pressure on this day. So I find that quite interesting. And then if you look at the algo flow in the server, you get a bunch of gaps to the downside. So it can go anywhere. I like it better. I like it personally better to the upside in terms of risk reward, being that the moving averages are right here and this bullish engulfing, but who knows what it's going to do. The hard level to break is going to be 1536, and then we have this 50-day to deal with. The next one is Crowdstrike. With Crowdstrike, as you can see, we kind of had this kind of flagpole, bear flag formed and broke to the downside. So it looks like that move is done. I don't think there's a continuation brewing. Looking at this kind of falling resistance line, we kind of broke above it on these days and then retested it, and now we're bouncing. So there's a potential for obviously with the higher highs and higher lows, we got a possible uptrend forming here. We have the bullish engulfing on a daily, right? So bullish candle breaking above the highs and lows of the previous day. Actually, just strong move down, strong move up to break out of the chop of this day. RSI stable and pointing up. It's at 46, pointing up. And then we have if we look back at the weekly candles, weekly price action, we have this strong impulse move from 31 all the way up to 298, which is a wild ass move, by the way. And we retraced about half of that move. And now we kind of got underneath it on this day and powered through, on this week, and powered through to get back above that 50%. So that's bullish. Right now, the bear case for this is, we're still in a strong downtrend on a daily, right? Near-term downtrend. We need to form those we have the higher highs and the higher lows. We need to make at least one more high and one more low. Looking at it now, it kind of looks like an inverse head and shoulder potentially forming, but really we need to get up into these levels and really at this 50 before we can get very bullish on it. Otherwise, we can expect chop or additional downside move. We have this possible H forming on the daily, and then the risk reward for me personally is better to the downside on this. So although I like for stocks to go up, especially CrowdStrike is a company that I interface with quite often. Good company, they give us a good service, but it looks better to the downside for me personally. Now the next one is Disney. So if you look at Disney, I just want to zoom out a little bit. Disney kind of held this line here for a bunch of times, and it really flushed through on this week, and it fell through all the way into these weeks. It formed an H and broke, and now it looks like it might be testing these previous supports as it might end up becoming resistances. So I just want to keep that in mind when trading Disney. these might end up being resistance levels here. Right now, let me actually open my notes.
Got earnings this week on Disney too.
And they have earnings, which and actually the reason why this is on the list is because this is on Kramer's buy list.
Fucking sell it.
Yeah.
Sell it all now.
What was it? I think he said Facebook was on his buy list and it got down to hell. So yeah, Cardo put this in the group and he's like, yo, he put Kramer's buy list and he's like, just analyze these. And they're all looking like a good downside move, to be honest with you. I mean, obviously we're into this kind of gap here, and it's not quite full. Let's see. Yeah, it's not quite full. There's like a couple of maybe 10 cents to the downside or something. So we can add some more volume to this kind of downside move. Let's do my bull case first. So strong green volume on this week. A bunch of buyers. It hammered right at the 200 week, which is meaningless, but it hammered and it kind of pushed up. We have our higher highs and higher lows from last week into this week, right? We have our higher highs and higher lows. Now we have to form higher highs, really take this level out, take out this 50-day, take out this 21-day, the 9, get above the 9, like with gusto. The MACD is about to cross. So we look at the MACD, it just turned green. I guess it just crossed on Friday. Now it can start its move to the upside. If you look at the T-all command in the server, so this command, this pretty much says everything says bullish on it. So I would have to look through and see kind of like what the flow has been, what the expirations are, what the biggest bets are in order to kind of see where people are pricing earnings or people are playing earnings. Something as beaten down as Disney, it can easily get beaten down some more, or it can just put in a massive gappy candle depending on what kind of guidance they, I think it's more guidance than anything else this season. I did read something about them losing subscribers, and that what people do with Disney is that they'll buy, like they'll when whatever Black Widow or something comes out, they'll subscribe, watch their Black Widow, and then cancel it after a month. So I realize that that's a problem with them. So let's keep that in mind. I mean, they probably don't have a strong following, although, if it was up to my daughter, the stock would be at 1,000 right now. Let's see. In terms of the bear case, we have lower highs and lower lows. So obviously we have these like short-term highs versus these highs and higher lows versus these lows. But overall, we're still in this downtrend. This impulsive move, these 4 candles up can easily be a pullback on a downtrend. So it can be kind of like, down, up a little bit, and then down more. We're below all the meaningful moving averages. I mean, the 9 EMA is right here, but we got the 21, the 50, the 200 is way up here. We're just well below them. This 200 is curling strongly to the downside. And if you run the algo flow on this, you'll get a big gap to the downside on the 1 day and the 5 day for Disney. So, I mean, I don't know if anybody wants to play earnings. Let's look at it. We have a $8.6 move, and on the weeklies, I mean, volume is there across the board. Open interest is there across the board. We got 3,000 on the 130s, 1,800 on the 95s, and then we got and I'm looking at the OI. We got 1,600 on the 145s, 2,300 on the 155s. So I mean, 3,500 on the 150s. So it's kind of an even distribution. Friday, obviously, some people lost money on the put side, but I don't know. I do not know. Let's look at the options time of sales to see what the biggest orders are for Disney.
Real quick before you do that, can we?
Yes,
So we just talked real quick about an 8.860 move as the market maker move that we're expecting. So anybody that doesn't have TOS won't have that market maker move. So a quick and dirty way to get the same move, if you go to the option chain and you look at this week's, if you look at the at the money calls and the at the money puts, at the money calls on the offer are trading 410. At the money puts on the offer, at the money puts on the offer are trading $5. If you add those two together, it's at 915.
Mhm.
That is a fast way to
Oh, I see. You just add them together.
yep.
Interesting.
And obviously that'll change as prices change, but so will the market maker move. You know, it's not
Interesting.
really. So that's if you don't have toss, that's the way to guesstimate what you need as a move, and it makes sense if you traded a straddle. If you traded the at the money straddle, that's the move you need to make any money. You know, $9 up and $9 down.
Oh, that makes so much sense. Wow, that's great. And then also, isn't it like an increase in a higher volatility on this week than next week? Is that something? Is that IV crush
Yep.
something? Yeah. Hold on one second. My daughter's here. What's up, girl? Okay, give me 1 second, guys. I'll be right back. Jay, if you want to take over, go ahead and grab it. I'll just be right back in like 30 seconds.
Yeah. So
I'll stop share.
I didn't see the other the other request. The only one I saw was SE. So if anybody has another one in the hopper, you want to put it in the chat, I'll take it. TTD. Oh, I did get up. Earnings in 2 weeks, so don't really have to worry about that. I haven't looked at TTD in a while. All right, I'll do Lulu as well. I mean, TTD has been building this kind of flag, but now we're really above it, right? So here was the true flag. And now we've broken above it, came back right into it, but broke out again with huge price and pretty decent volume. So big volume shelf here at 74.14. You can see by that kind of that bluish shelf here on the volume profile. So, you know, above 75, you've got the 200-day, 100-day here, and 50-day here. So flat moving averages like we have here are really, really hard support or resistance. So this doesn't, you know, on a bullish case, this really doesn't have too much run in front of it. Up to 76.5, we'll just call it. So, you know, it's got from, what do we close at? 73 to 76.50, you know, 3.5 points of run here, you know, but if it does break through above, you know, now we're starting up to 82. I thought I had a lot more TTD. Let's look at this one. Basically another one. So here, you know, here are your chart levels. So this price line basically comes in right at the 200. This price line comes in at the 100, and the 50 is right there as well. This price line is also value at high, but I mean, it's just all right here. So if you want to be bullish on TTD, there's a run to 77, 80, you know, 81, 86. To me, though, it's not, you know, these are, you know, higher high or higher low, higher high, higher low. So if we can, you know, there's room to make another higher high here. So it's automatically we have room to run to 76. So that's not too bad, especially, you know, we've got earnings next week. So that, you know, if the market is favorable, we could really get a nice little run up here into earnings. Your bear case obviously is if it just pulls back into this area and dumps 65, you know, so you can kind of play this both ways. If we get the run, you've got your run up. If we start to dump, I wouldn't trust anything until about 65 because it really could just chop in here. So, you know, if we stay in the 65, 73 area, if we stay inside bar basically to this, you can play, you know, you could probably just scalp it up or scalp it down, whichever way the market seems to be taking it that day. Lulu. So I used to watch Lulu a lot. Ever since on this downtrend, I keep missing everything, so I just kind of stopped. But I love yoga pants. So we've got a possible, now this right one hasn't formed yet, but we do have a possible inverse head and shoulders here on the daily. If this ends up being the shoulder, this 331 area, it's almost technically perfect for head and shoulders because you always want the right shoulder to be lower than the left shoulder. So boom, up here. This is your neckline. That confirms the head and shoulders, the inverse head and shoulders, but you can play run up to here. So if we get say we get a move up, you've got room to 357, it's 20 points that you can play, either as a day trade or, even a swing. If you got in around 340 to kind of, let this kind of build its way up, 340 to 354, that's, 15 points there. So you can play this multiple ways. Now, this looks very bullish in this sense. It's like the weekly. The weekly starts to look a little bearish. Could be a bear flag, just could be, a V reversal. So still the same, still basically the same areas that you would play as on the daily. A fail beneath here, beneath the shoulder here. What's the low on this? 329.75, 329.25. So anything below 329, this comes back to, these areas down here, and we can start testing 300 again. So inverse head and shoulders, this looks great. And you can also play, if it doesn't hold this, so whether it's inverse head and shoulders or a regular head and shoulders, if they fail the neckline, those usually get explosive moves in whichever way it was originally moving. So this way down. Those are typically really, really big moves. So we could go from, if we got to move up to here, up to the neckline here, this 354, 355, 356 area, depending on when it gets there, that becomes a really fun spot to watch. Because if we break through, then we get a nice move up. But if it fails, we get 300 probably pretty quickly. So basically, this 340 to 350 area is going to be really key, and anything beneath 329 is going to be key. DraftKings. I mean, it's just, I had this bear flag that didn't really work out. But now it's just turned into this bear flag. So really here, your big spike in volume is on this, inverse hammer, where it looked like it really wanted to go up. So this is kind of like what I was talking about, a modified candle or a modified flagpole. But in this case, I would actually be taking these candles, these two candles beneath it, and kind of all of these, but really these two candles, because this built the down move. So this is building your flagpole. Yes, it did pop above all of that, but it's still on declining volume. So the 20 coming down underneath or down on top here, if we can get another day or two here, I'd really would like to see, or I would expect to see a flush down here into the 17s to retest this low and go. Now you could also make the case, and I know I'm going back and forth on this, but you can make the case of this is starting a 1, 2, 3 reversal. So a move down is move number 1, a move up is number 2, and another pivot that's higher. It's just another higher high or a higher low, excuse me. We could start to see that. So basically anything a pop above 24, 24 and a half, it's going to start taking a move up towards the 50-day with 26 by the time it gets there. But I really like this more as a bear flag. Take this down to 17, stop above 24. Actually, stop above your 20 here. So 23 and a half or so. This will be the last two here, CVS and Affirm. And CVS is just basically building this. Earnings on the 9th. I mean, it's already moving sideways, and it has been for past couple weeks now. I would just assume that it's just going to move even more sideways up until the 29th. I don't really have much more to say about this. I mean, it could kind of break out of this, but it's not going to go anywhere because of earnings. Affirm, kind of the same deal. It was building this bear flag, but we've got earnings here, so you could look at it, and it's kind of, if you look at DKNG, it's kind of the same exact chart, right? Oh, and I didn't even look at DraftKings has earnings next week, so more often than not, this is probably just going to move sideways. And I'd say the same thing. This is, this week on the 10th, so on Thursday. You might see a breakdown here. So you could have some run from 60 to in the mid 50s, even all the way down to 50. But that would probably be if the market isn't favorable. So if we start dumping this week, then some of these things are just going to play out naturally because they have to. And I would say the same thing, especially because we have another week's worth of trading before theirs. This will play out much better, assuming that the market goes down. Otherwise, but for both of these all three of these, DraftKings, Affirm, and especially CVS, it's kind of wait and see patterns until earnings. CHWY, you back?
Yes, sir.
All right.
Thank you for those.
No problem.
Yeah, I was meaning to look at some of those as well. All right, so I'm just gonna jump back into mine real quick. And yeah, I mean, guys, with earnings, there's not much we can do. When it comes to earnings, we can set an analysis and we can set an intention, but the shit's gonna do whatever it wants to do at the end of the day.
Mm-hmm.
So let's see. Next one's Honeywell. For Honeywell, I'm just looking through my notes here. I just gotta make sure I don't want to miss anything. All right, so for Honeywell, so I set some targets. The target's a little bit clearer on the weekly, right? Downside, we got this little gap to fill here, and then we can start testing kind of these previous resistances. Will act as support, and then on the broad scheme, you have this kind of head and shoulders that played out here, and now it's working its way down. Going back into the daily, we have some clear kind of, so this is kind of where the market is at here, where it kind of formed these higher highs. And now this one looks like it just flushed it and formed the H, took out, there's another little kind of head and shoulders vibe here. And so that's where we're at. So Honeywell might be ahead of some of the other tickers in the market. Talking about the bear case, it's bear flagging on multiple time frames. So if I go into like the kind of intraday levels, let's do 30-minute, bear flag, break. Let me draw it out. You got the flag, and then there's a break, another flag here, break, and now it's kind of forming this massive, this kind of massive flag here to fall down. Now, if you look at it on a daily, it's all below all of its moving averages. The 9 is way up here, like everything is just underneath everything. It seemed like it was a very bad reaction to earnings on Thursday. And we had that little gap to fill over from way back when. And all the algo flow stuff says bearish, right? Now the bull case for this is the R size like approaching oversold. I think looks like it's at 30.1. This hammer here on the daily with some pretty decent volume kind of formed. So there's a potential for this to be maybe some change in direction here possible. Who knows, right? Now, a lot of buyers, if we come into like kind of walk into the intraday levels, a lot of buyers wanted to defend this. They came in, they stepped in and wanted to defend this level here. And they wanted to keep the price above kind of this 191.07 level. So, or maybe even this 191.50 level. So that's going to be a key level to hold. Now, if you look at the chains were overwhelming. I wouldn't say overwhelmingly bullish. But I will say, 80% on 218, 80% of it was calls being bought. And overall, the open interest is 65% bullish on the 218 expiration. So I think that there might be kind of a bounce, but who knows? Usually the OI isn't enough to go on. So just keep that in mind. So the next one I have is IONQ, and I just have a handful more. So my bull case for this company, and this company, I think overall over time will do really, really great. I think it's just suffering now because people are just making money shorting it to hell. Now, my bull case for this is this, part of it is this kind of Morningstar reversal pattern. We have this downside move at the end of a downtrend, a doji plus a big green candle taking out previous resistance. This is a nice clean Morningstar. Is starting to form. So if you pull into the daily, that's on a weekly, right? Pull into the daily, we got kind of these higher highs and higher lows that every other component of the market is kind of forming, right? Highs, lows, new high, fresh high here. We bounced out of this demand zone. So a bunch of buyers came in at this level and it made a massive upside move after some indecision, right? Some indecision on these two candles and then big upside move. So now we came back down to this kind of level, and you see that there's some buyers in this area. So it seems like it might be a decent demand zone. Let's see, the 9 is about to cross the 21 in a couple of days, but the price crossed the 9 and the 21 both on this one day. A bunch of volume came in on that one day, so there's something there. And then the risk reward is skewed to the upside. There's a lot of support here, especially with these moving averages, a lot of support in this area. And then in terms of just the price itself, there's some support at previous resistance here. So a lot of support in this area. So we can come and test kind of these levels. The next real major pain in the butt is going to be this 50-day moving average, way up here at $16, and we're currently at 12. So nice move there. Now, my bear case is if you follow the algo flow, you'll get a big downside gap on a 1 and 5 day. If you use the command in the server, it'll give you that. And then we're still in the downtrend. Even with this higher high, we're still obviously in this massive downtrend, right? Big, massive downtrend. Now, the last thing that we have on the bear case is, and this might just be a reach, but, it tapped here once. It tapped here again, kind of tapped here again. If it comes down, and it taps it one more time, it might just take it out, right? So that's kind of a weak case and kind of a reach, but I just wanted to put it out there. The next one I have is Coca-Cola, which reports earnings this week, I believe on Thursday, on the 10th. So Coca-Cola has sort of a broadening formation kind of playing out, where it's forming these kind of higher highs, lower lows, getting more volatile, right? Making these bigger kind of volatile moves. Now, the bull case for this is that it's forming higher highs and higher lows. Right here, the highs getting higher, and the lows are getting lower, right? Higher as well, right? So we're sitting on the 9 and the 21. These two lines right here are serving as support. We're consolidating here. This all consolidating here above previous all-time high. So I'm going to go to the weekly, and here's a previous all-time high at 60.13. And we're well above it. We're testing it a bunch of times and staying above it. So that's very bullish. Because up here is decision time. All the people who bought it at the previous all-time high here at 60.30 or 60.13, they could have sold on these days, right, and took the profit. But looks like a bunch of them are still in the game, or maybe some fresh buyers are coming in, right? So that's good. And then we have an algo flow big bullish gap on a 5 day. So if you run the T-algo flow KO 5, and you'll get the nice gap. Price is above the algo line, or sorry, algo line is above the price, so price will follow and go up. And then we have a little bit of, before we get to this kind of top of this formation, we have a little bit of a gap, so we can come up to test some of these levels here before we work, if we work our way down. And that's all. And maybe that's the next couple of days before we even get to earnings. Earnings can send this thing way back down here, or it can send it to to the moon, or whatever the kids say nowadays. My bear case for Coca-Cola is that it's approaching the top. So once it does reach the top, it's going to work its way down if this is a true formation. The MACD kind of reclaimed its strength. So you see it was bearish, and then it kind of lost some bear strength, but then it put in a big bear candle to kind of restart. Also, now that I'm looking at it, the RSI is kind of pointing down. So, just keep that in mind. Let's see. And then there's a small bearish gap on the algo flow if you do it for the 1 day. So if you do T-algo flow space KO with no number following, that'll just be a 1 day, and it'll show you that the algo line is below the price. So the price might come down before it works its way up. So let's see what my battery's at, 11%. Let me plug in before we all get clapped. Let's see. Okay. The next one that I have is, and I haven't even really gotten into the ones that I like. So maybe I'll save that for I'll just post those afterward to not take too much time. The next one is Cloudflare. Cloudflare, I really like this setup. I think it's just a clean setup, right? Like it's clearly defined. There's not much chop surrounding it, so we can kind of make clean moves. My bull case is that it's above the 9 and the 21 on the daily, right? It's above these two, the white and the gold line. So that's very, very clean. Nice Morningstar reversal pattern on the weekly. So if we go to the weekly, we kind of see that pattern again, where it's like big downside move, followed by doji, followed by a green candle. Big green candle above previous resistance. So nice reversal pattern. Potential on the weekly, excuse me. Last week's candle took out the previous resistance. So those two candles. We have good risk reward to the upside. The reason why I say that is because upside, we have very clear targets. We have this 114, we have the 200 day and the 50 day are going to meet right at this 124.25. So this is I think this is a magnet personally. I think this is a magnet. And then obviously I think it's going to get struck down like lightning, but downside, we have there's all this support on these 2 days, on these 3 days rather, plus the 21 and the 9 day. There's just too much support there for me to think that downside is a good move. I think personally it's better to the upside. If we do break this support on this day, or even take out the low of the day, we can, which will be a very hard, just looking at this level, it would be very hard to take that out. But if we do, then we're going to break right through these targets down to test 76.61, personally. Now, let's see. And then the last thing that I noticed for my bull case is that, let's see, is it here or is it on a weekly? Just to make sure. Oh, no, it's here. You see volume spikes recently. So like this is on the 4th. Maybe it was on a weekly. Let's see. I mean, like on this day, we had a big volume spike on a day where it was still trending down, but we had a big volume spike on a green day. Another kind of big volume spike on this green day right here. And now volume is picking up a bit more on this green day. Let me look at the weekly just to make sure. Yeah, it's a daily. So I like to see buyers step in, even if we're still downtrending. I like to see buyers step in like on days like this and days like this, where there's big above average green candle volume, because that shows me that even if we're in a downtrend and it's not putting big massive candles, it shows me that institutions and insiders and big players are loading or accumulating on those type of days. So you'll see big random spikes like this on like kind of nothing days, and ultimately when they make the upside move, that's what they're looking for, right? So that adds to my bull thesis. Now, my bear thesis for this is that, again, just like most of the other things that we analyzed, massive downtrend. This rip up could easily be a pullback into a downtrend, right? A continuation of the downtrend. This 50 and this 200 are gonna, like, that's a massive wall. That's a brick wall right there. That's with like 10 layers of bricks. You know, the price is not gonna go above this quite easily. I think it'll take a couple of days to try to break through, unless there's a super duper, like they say something, you know, that's super bullish on this day, on the 10th for earnings, right? The next thing is there's a possible potential H, right, which is the same thing, kind of a pullback and a downtrend. Continuation will make the H, and if we break this H, we'll flush directly below, all the way down to this previous support at 65. We go to the weekly. The 65 served as support a bunch, right? So that 65 is going to be a hard level 1, 2, 3, 4, 5, 6 times in the past. So I mean, we've flushed this. We'll come back to that 65 to kind of retest it. So otherwise, I like Cloudflare. Again, it has earnings this week, so who knows what it's going to do, how it's going to react. Let me hide this so I can admit Nick. Okay, who knows what it's going to do or how it's going to react, but I like what it looks like on a daily. I think it has a very clean setup. I think it has great risk reward to the upside. And Cloudflare, this company pays when you play it. It really does pay when you play it. So if you like it, you like the setup, keep it on your watch list and let us know when it's running. Next one is Nike. And then after Nike, I'm just gonna kind of rant for a few minutes. So, all right. So Nike, my bear case for this, and I think I'm bearish on this. I mean, just based on the technicals, not so much the fundamentals, but more the technicals. You know, we got this kind of bear flag here, right? It's like, here's a flagpole, here's the flag, and it just needs to kind of bust through and break down to work its way down to like the 135 level, which is my ultimate target for the bear flag. 10-point move, nothing crazy. Now, another thing, the MACD, it's green, but it looks like it's ready to kind of continue to work its way down and flip soon, next 2 or 3 days, if we don't get a big upside move, right? We're underneath all the moving averages. So here's the 9, and it kind of tested the 9 and rejected. And all the other moving averages above it. We're about to get a death cross in a few days. Yeah, and then it looks like it wants to come back to test this kind of really, really strong support level. I just see more downside. I see more pain for this, and I see a better price in the future personally. Now, for my bull case, which is not much, we did form some higher highs, and this is a higher low. So if we can kind of break through and break this high, break through these moving averages, and get to like around here, then that's like a higher high, and that'll give me a little bit more faith, because it'll try to meet the 50 and the 200. If you look at the open interest, the OI is more bullish than bearish. Do I have it? I don't think I have it here. I don't have it here. So just look it up. You'll see it. Actually, let's see if we can identify it here. Let's see. Yeah, I mean, we got like 11K in OI on the 160s for this Friday, and nothing near that on the put side. Nothing near 11K, right, at all. And I mean, this is far out, and it's just super cheap. Somebody probably loaded 10,000 and wanted it to go from 4 to 6, right? So let's look at the Feb 18. I mean, the numbers are stacked on this side: 4,000, 6,400, 3,600, 2,600, 75, 8,000 versus 2,800, 5,000. You know, 6,400 is probably the biggest one in the money puts, right? So this in the money put is actually it's actually bullish. It's actually super bullish, because you know, you don't make money on this until the price approaches above, you know, any massive put order above the current price means that they're expecting to move to the upside for it to then get more value, which is really kind of a weird way to think about it. It's kind of a hedge vibe, you know. It's kind of a weird way to describe it. I won't take too much time on this now. Maybe we can talk about it during homework. That'll be a good time to talk about it. Somebody remind me. So so that's that. And then if you look at the algo flow command, if you do the 5-day algo flow command, then you'll get a big gap on the daily to the upside, right? You'll get the algo flow line above price, and price will flip up and meet the algo flow line up above. So maybe it'll be up above, maybe at this 50-day, 200-day kind of confluence area over here, right? 50-day in the red, 200-day in the green, confluence maybe right in this box right here. So that's what I see with Nike. Now, I wanted to get into some sectors. I didn't look at the sectors in detail. I saw that the STB wanted to talk about some sectors. So I'm gonna go through some that I think that we play pretty consistently. I have UA here. But I don't like this chart. I'm not gonna waste my time on it. They have earnings in like 3 days. This is part of Kramer's list. So if you like it, you see something you like, then go ahead and chart it for us. I don't like it, so I'm not gonna chart it. So let's talk about the sectors. Let's talk about XLI. I call that an XLI play on, I think it was on this day or one of these 2 days, and I added to it on this day. And if you traded through it, then you made some money on this. Right now we kind of industrials, so Cleveland Cliffs, X, Boeing might be part of this list. Any miners like Vail or things like that are going to be included in this list. A lot of them, some of them reported earnings last week. Some of them report in the following weeks. I think next week a lot of them report. Now, I think that XLI is poised to make a nice move based on Biden's Build Back Better. You know, it's been stalled for the past couple of weeks or months rather. And so he's trying to, he had a meeting with some of the top CEOs to try to get some momentum and some people to kind of pump that. And I don't know how successful it's been, but I think I like the consolidation. I like the move. I think based on what, you know, the whale order, which was, let's see if I can find it, if I can remember what it was. It was 318. Yeah, is this one 318.106, which I'm down on this account, and I'm up like 20% on the other account. But yeah, the whale is still in there. I mean, it's 6,000. The day that we jumped in, it was something much. It was like, you know, volume exceeded open interest, which shows a big order. So that's why I chased it. I like it. I think it's good. Let's look at the monthly. I don't even have monthly on this laptop. Let's add the 10-year, 1 month. Add. Okay. Let's see. Yeah, and we got an inside month, just like STB said. Inside month, which with a whole month to go, you know, a whole 22 days to go. Or rather probably like 16 days of worth of stock market. We're favoring the downside on this monthly inside bar. So, you know, if you're in it, just manage your position. I'm in the play with profits from last year, so I don't care what, I could care less. But I still think that it has an upside move. I still think that it wants to test some of these levels, because if you look at it, it's kind of been ranging, right? And then green bar, flush, big green, big red, big green, big red. So, you know, if it continues to move in the same direction, in the same kind of pattern, then we're going to get another green. However, looking at it now, I see a MACD cross occurred, started on this month so far. It's crossing on the MACD. I see that we are flushing beneath the 9 monthly. And I also see that, let's see, that a massive volume came in on this red candle last month. So this could be the start of a move, or it can be exhaustion. So personally, I'm going to stay in because I'm profitable in one, which I'll probably cut it this week. The other one, I'm going to hold it into expiration because we have a whole month to form. If you are heavy, then and you get shaken out, I mean, maybe you find a better entry. If I see one, I'll call it. I like XLI. So far, so good with it. Personally, let's look at XLF. Now, I bet a bunch of these are going to form inside days. Inside months. So this is XLF. forming an inside month. Let's look at the daily. What I like about XLF on the daily is a few things. So if we started a move at 41.7 and we end the move down here at 36.83, then this is 50% of the move right here at 39.25. We've already broken above, we've already retraced more than 50% of the move. So we're above more than 50% of the move. Now we are above the 9-day moving average. We're above the 21-day moving average. We're above the 50, which is this red line, and we're above the 200, obviously, after testing it and bouncing on it a couple days ago, a couple weeks ago rather. Now this is a critical support. This level here at 39.87. We can even just call it 40, right? This is a critical level. The reason why I think it's critical is because it rejected here once, twice, 3 times, right? On these 3 days. Now we broke through above it with volume, with conviction on Friday. And obviously we got the MACD, the bullish cross. And the last time that volume spiked like that was on a big green day at the 200. So we have an upside move in play. But we did see some sellers step in. And so we want this level to hold. And we want to base along this level. The reason why we want to base along this level is because if we don't, this is a rising wedge on a daily. And rising wedges are a very bearish pattern because buyers can't power it through this kind of resistance level. So if I don't expect it to just break through, I expect it to kind of fall, but I need it to hold this kind of crucial support level here at 40, around 40, right? Let's just call it around 40. Now, what I do like about it, it's above all the moving averages. So these moving averages will act as a support to kind of catch it. So we can hope. But let's see. I think I plotted some 4-hour. Yeah, these are 4-hour targets. So just some pivots that we got to take out, right? We got the crucial support here. We got this previous support. We got this previous resistance, and then we can kind of work our way back up to these levels. So I like XLF. I wish that this downside swing on the MACD would have been bigger, but you know, it is what it is. If we do break out of the bearish falling wedge or rising wedge, we hold this level. Simple as that. Let's see. Let's go back to daily, and then we did XLI, we did XLF. Let's do XLK technology. If I go to the month, then yeah, inside month, it's almost identical to XLI, except that it's above the 9-month moving average. It has, so I did a Fibonacci from this low of this candlestick to this high of this candlestick. It makes more sense on a weekly, right? I did a fib from just that big move right there. Actually, let's just do the daily because that's why I did it. So Fibonacci from this move to see how deeply we retraced. We're at 61.8 and some buyers stepped in. Now, I think most of the tech companies have reported. Let's see, Facebook has, Apple, Google, Amazon, Netflix, Tesla. They've all reported. So all the big boys, right, have all reported. So now that we're at this kind of crucial level, the 61.8 golden Fibonacci level, if we hold here and now we're gonna have to just fight the 9 and the 21 on a daily. And once we peak our head above that 21 the way that we did here, then we can continue to work our way up with XLK. XLK and QQQ are pretty much identical. They're pretty much identical. I think XLK has a higher Microsoft Apple weighting than QQQ does. But yeah, I mean, they're pretty identical. You know, they're both underneath the 9, underneath the 21. If I do a fib retracement on this, then let's see if it's at the same 61.8 level. From this day. Yeah, this is at the 50% level. So XLK is a little bit stronger than QQQ is. So the only thing is XLK isn't as liquid as QQQ. Obviously, the Qs have Monday, Wednesday, Friday expirations. XLK does not. XLK has weeklies, and they're not that great. They're not that great. But if you wanted to get some exposure with tech next time, like there's a big catalyst incoming, then you know you can just play XLK. It's relatively cheap, and you're not subject to volatility the way you are with those other ones, with directly with Apple earnings or Tesla or whoever. They have a market maker move, so I wonder who it is that who on the list is reporting this week. Next one's XLRE, real estate ETF. Real estate ETF was perking up a couple weeks ago, or excuse me, a couple days ago. On this day, I had it on my eye because it was at the kind of the top of this falling resistance line, and also right by the 21 above the 9. But it kind of fell down and landed on the 200 at this kind of rising support. So good confluence here, good confluence here. It's a matter of who's going to win that battle. I see it go sideways for 2 days and then kind of make a choice. It looks more bearish to me, especially since the MACD flipped green and I was like losing steam. It does look way more bearish to me than anything else. So I think that a continued downside move is possible. This also isn't very liquid. It has monthlies, and not many people. I mean, it's not even worth looking at, to be honest with you. The last one is XLY. XLY is the discretionary, consumer discretionary. So AMC, GME, all those, Home Depot, Cat, Amazon. It's pretty heavily weighted. So XLY looks good. What I like about XLY is that it's above the 9. The 21 and the 200 are right on top of each other. The 50's up here. So if we can get above this 200, just like we have on all of the other spider ETFs, right? All the other spider ETFs are above the 200. If we could do the same thing with XLY, then I expect to do the same thing with XLY. Let's see, same inside bar, which all could be 3-bar plays to the downside if we're being honest. But if we get above this 200, then if we get through the 200, it'll go right through this 21 like butter. Another like is that we are pretty stable at 44 on the RSI, and we just had a MACD cross last week, or excuse me, Friday, with its first green candle. So, and is that? Let me just see. It looks like it was it was a pretty deep swing, right? The signal line, the MACD line came down pretty low, which means they'll swing up pretty high. So we obviously had like a head and shoulders kind of thing going on that forced us down. Oops. And now we have kind of an inverse head and shoulders, or maybe a double bottom, higher lows, higher highs, higher high, higher low. Now we have to make a higher high above this 21 day and above this 200. Once we get that higher high, I think that'll be a nice buy signal to try to test this 50 day. So, however, if the 200 acts as resistance and it doesn't even try to get above it, then this is going to come back down and kind of form an H. And I mean, if you've been paying attention throughout this whole call, most of the market looks like this. They've all kind of bounced and they formed higher highs and higher lows, and they all need confirmation with a higher high. And if they don't get that higher high and they get pushed down by some sort of force of gravity, then they're going to work their way down and retest some of these lower levels. Now, going back to, I haven't seen SMH in a while. Yeah, same thing, higher highs, higher lows, bounced. So going back to SPY, I mean, decision time between, hopefully it'll work its way between kind of this area here between the 9 and the 21, kind of this area at the 50% retracement. And if it can stay above it, then that's good. And if it can't stay above it, going back to QQQ, I think that tech is going to come down. Everything to me looks kind of, it's like everything's kind of in a spot, but we couldn't take out the 200 on this hanging man and we kind of fell. Going back to IWM, it looks like it's, IWM is doing it the most clear. It has this kind of flag and it's falling. It's underneath the 9. Everything looks like there's more downside, right? I charted it here on QQQ. I think there's more downside for us. And I think that, and I could be wrong, obviously, but And I hope that things move up, right? For the sake of my long-term portfolio and for the sake of our calls and for the sake of, just fun in the market. I think when everything is running, it's much more fun than when everything is dropping, right? Because like we're like that meme when things drop, even if we're playing puts, we're like that meme where the guy's crying behind like a smiling face. It's not fun. It's not fun because your long-term portfolio is suffering unless you're hedging, taking the money from the puts and just adding to your position, which we all should be at this point. And if we're not, and if you're confused, then holler at me and we can talk about a strategy. But everything looks like it has more downside. And as much as I would love this to be 500, it's not. And if it follows this kind of plan, where it kind of chops around here and does one of, it's gonna do maybe one of these, right? And then it's not like a clean drop. It's like always some kind of, you get those fakes and those bounces. As much as I would love just get here in one day, right? But it's not gonna do it. So I see more downside pain across many of these tickers. Some of these have an upside bias, such as CB has kind of an upside bias, even though I think it's extended. CHWY looks like if it breaks out of that descending channel, then it has an upside bias. CLF still looks bearish to me. CMG still looks bearish to me. Crowdstrike still looks bearish to me, even though it put in like a big bullish engulfing. Disney, I might just swing puts for earnings, to be honest with you. Just based on the news that we got from the past couple of weeks. If you're thinking about puts, maybe get some time on it. I think maybe I don't know. I like how many people are on these 130s. The 130s for this Friday, and even the 130s for next Friday are pretty good. You want another slice? Okay, give me a few minutes. I'll bring you another slice. You got to go to bed soon. Put your socks on, please. Everything looks bearish, guys, and Disney might be the one. I mean, I think I might just jump into these 130s for next week just to give myself some safety. There's an $8 move priced in. $8 will bring us down to 135, and then we got hopefully some more slide. I'm just super bearish on the market right now, and there's no reason not to be. Even with all of these kind of higher highs and higher lows forming. Honeywell did the same thing. It kind of formed higher highs and then it just flushed, right? And obviously through earnings as a catalyst, it flushed it. This is probably one of the few charts that I think that are super bullish. IONQ, and IONQ doesn't really move with the market. It kind of does whatever it wants to do. Another one that this kind of looks like is Jumia. I didn't see what Jumia did on Friday. Green candle out of a bullish move. Let's look at Palantir. Green candle, Palantir looks like shit. What else? What's that? BNGO. Yeah, these all look like crap, right? Everything looks bad. There's nothing that looks good. Let's look at NVIDIA. Yeah, it's the same thing. It's kind of the higher high, higher low, but then what? Are we going to make the higher high or are we going to continue to fall? They have earnings next week. I think they're going to do great on earnings. So maybe we continue to slide until NVIDIA brings the market up. All the big boys reported, NVIDIA's next. So everything to me looks bearish. Keep that in mind. If you want to play calls and you wake up and futures are super duper green, be cautious. If you think that we're near demand and on a particular ticker that you like and you want to play calls, make sure it's near support, near demand, bullish catalyst, all that, because now's not the day, we're not in the market to really swing anything. So I think that's it, guys. I don't really have much else to say other than stay bearish for now. Unless you're playing IONQ, because IONQ looks really, really, really great, really clean. And again, I could be wrong tomorrow, right? Net is another one that kind of looks really nice to the upside. Bless you. So that's it. If you guys have any questions, go ahead and drop them in the Watchlist channel. If you are not a member of our server and you're watching this on YouTube, we're offering a 1-week free trial. All you gotta do is visit gorushgang.net, click join us, and click on scroll down and click on Fun Pass. You got 7 days free with us. You know, and in this market, just be quick to take profit. And maybe quick means, you know, 20% take your profit, 30% take your profit. If you're playing multiple calls or multiple puts, then you know, then trim the profit when it's there and let that runner hit. Maybe you get 100 or 200, 300%, depending on what you're playing. So just be fast on your toes. All right, take care, guys. Thank you, guys. You guys are much appreciated. You know, all the effort that we do here is for you to learn, so that one day you guys are doing this for us, right? So any questions, any comments, anything, holla at me in the DM, and we'll see you guys tomorrow. All right, peace.